JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 11th of February 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then guys, jumping into the charts. Now the first one I want to pick up here is Hong Kong's Hang Seng Index up. Just bear with me. Back to disclaimer. So yeah, Hong Kong's Hang Seng Index here, which as you can see also managed to climb nicely to the upside, and now we're seeing that this index is kind of stalling near the highest point of January, near the 30,191 zone. So of course it's just fractionally below it right now, but that's the area that it almost managed to reach today. Just fell shy by a few points of doing that, but yep, nevertheless we still remain above some of these upside lines that I've mentioned before, guys, and in a way, as long as these upside lines kind of stay intact, then there is still a chance for the index to move higher later on, because, and what I mean by that is that even if it drops below this little short-term one or this other one here, there is still a chance to jump in for the bulls somewhere near this other upside line drawn from the low of the 30th of October. But if that even gets broken, we have another one. So basically we have a bunch of tentative upside lines that kind of are still showing the direction to the upside. However, from the shorter term perspective, I believe that these upside lines could prove to be useful when, let's say, considering some larger corrections to the downside. So, but again, for now, let's talk about the upside, because that's the kind of the main scenario. And if we want to aim for some higher levels, guys, well, wait for that push and wait for that daily close above that 30,191 zone, because in order to get a little bit more comfortable with that idea, I would need to see exactly that. I would need to see that daily candle staying above this barrier, above the highest point of January, and then we'll take it from there. Now, another thing that I wanted to kind of show you, and what could potentially happen is, for example, if, let's say, this barrier continues to provide resistance and we see the index stalling here, then yes, we could see a bit of a corrective move lower. Now, in terms of the downside, what you could do here is, of course, depending on where we will be here in relation to this little short-term upside line, but in a way, depending on how this is going to move, maybe we'll actually see this barrier, this hurdle, the 29,706 zone as a good potential area to consider the downside if it gets broken. So basically, a break below this area here could in a way also kind of send already the price below this little short-term upside line, and then we could go for those slightly lower areas, initially aiming for the 21-day EMA or this other upside line drawn from the low of the 22nd of December, and then we'll take it from there. And basically then what we could also see here is maybe a possible ascending triangle. But again, for now, guys, it is how it is. This is just a few ideas for you guys just one of, or should I say, one of the ideas for you to kind of go forward. But keep that in mind. But again, if that doesn't happen, if we just go straight here and close above this 30,191 zone, then yes, we'll start looking at some higher levels. And by higher levels, I mean I'm going to be aiming for this little area right here, marked by the highest point of May of 2018, and that's roughly around the 31,592 zone. Something here. But the idea here, the reason why I'm mentioning this little potential hold up here, maybe a retracement back down, is because well, we saw a bit of weakness in the equity world yesterday, in the European markets, in the US as well. So yeah, I mean that might roll over into the Asian session maybe tomorrow. But again, let's see how this is going to play out. For now, that's the little game plan. Now jumping into the German index DAX very quickly here. So the index drifted lower, so fell below that 14,000 mark and stayed there. And yep, basically kind of the short-term scenario worked out nicely, because what I was saying that in a way, if we get a drop below this 14,026 territory, then my next target will be this 13,886, and together with this 21-day EMA, which we've managed to reach perfectly. So now the big question here is, can we see a further move lower? And what I said to you guys this week, that in order for me to, let's say, to get a little bit more excited with the downside, I would need to see that daily candle kind of staying below this hurdle, below this 13,866 zone. Looking at the cash index right now, well, we'll see that we can see that the price is currently trading at around 13,954 marks. So we're basically above the yesterday's high right now, but still below that psychological 14,000 zone. And in a way now, given the way everything kind of shaped up here, I would actually rather draw at this level here, and I'll pick up on this 14,063 territory. That's the high of yesterday. A nice good pop above the high of yesterday may open the door towards higher levels again. So let's keep an eye on this one, guys. We're at a very interesting spot right now, and let's see which way that's going to go. But again, I would probably take a bit of a careful approach here, because if you want to aim for some higher levels, well, yes, we could do that, but let's wait for certain breaks here, because we have already quite a decent up move. And for the downside, well, I mean, I'm not saying that the market is becoming bearish, no. So any kind of move lower could still be seen as a temporary correction, and that means that it might not even travel to one of your targets here on the downside. If it's too low, it might reverse earlier and push higher. So again, keep that in mind. So that's why for now, if I'm in order to aim for the downside, I'm looking at the this hurdle right here, the 13,866. I would like to see that daily candle staying below it. Ibex 35, the Spanish index, and I've talked about this one recently as well, but yep, just a quick update. So the idea that I shared previously was when we were still trading below this downside line, when I was saying that if you want to aim for some higher levels, wait for a break of this downside line and a push above the 8,088 zone. So we got that. We saw this push higher. The index almost managed to reach this little hurdle here, the high of the 21st of January, near the 8,276 zone, but just fell shy by a few points and reversed back down, and it's currently, or should I say yesterday, reversed and fell below the 21-day EMA and below this hurdle, below this 8,088 zone. So that of course raises a few concerns, and now the big question for me here is, of course, will we see a bit of a larger correction here to the downside? Because again, in terms of the lower areas, there is still a chance maybe for this index to rebound from this downside line. So it could travel a little bit lower, find support near this downside line, and then reverse back to the upside. Either way, guys, I will still stick to this hurdle here, this 8,088 zone. A nice good move back above this may open the door towards these slightly higher levels, and then we could take it from there. So for now, that's the case, guys, and let's see how this is going to play out. If this suddenly starts falling deeper below this downside line, then yep, I'll start looking at this little support zone near the 7,676, or yeah, the beautiful number of 76, and then yes, we could go further south. DXY, very quick update on DXY. We're trading below all of its all of these these lines, the upside one and the downside one, and yep, for now, basically, for now, we will be very careful here. We'll continue, let's say I'll continue aiming slightly to the downside, because again, there is a good indication that this could drift lower, because we're trading below these two lines here, the upside one and the downside one. However, if by any chance this index reverses back to the upside here and ends up being somewhere here in between these two lines, then well, I'll scrap the whole kind of line thing here, and I'll start redrawing the chart again, because at the moment, yes, this downside line is working out perfectly. Let's see if it can continue doing that, and for now, basically my target is going to be this 89.96 zone, or the psychological 90 zone first. Now jumping into gold. Gold is well, enjoying the, let's say, the slightly weaker dollar index, and yep, we can see the drift here to the downside, or sorry, to the upside, but it met resistance near this downside line here, the one that I talked about before, and this is exactly the reason why I was saying that I would prefer to wait for a break of this downside line, because again, it's not really straightforward here. So as you can see, as you can see, guys, here, that's why I would prefer to wait for a break of this downside line, and then a push above the 1875 territory right here, and then we could take it from there. But again, for now, it is how it is. For the downside, if you want to look at some lower areas just to be a little bit more on the safe side, well, I mean, I would prefer to see a drop below the 1819 zone here, and then go for some lower areas. At the moment, well, it's neither there or there, but that's why I'm gonna wait for a clear break through one of my levels here, the ones that I mentioned, either above the 1875 territory or below the 1819 zone. Silver is kind of working out partially, I would say, because the idea that I mentioned previously was that it may move higher, but if it finds good resistance somewhere near the 27.92 zone, it could drift back down. And as you can see, well, I mean, the price here fell back closer to this 26.60 zone, but remained above it. So for now, basically, it's a very tricky spot here, and to be honest, I would, in order to go for that larger, let's say, correction to the downside, I would need to see a drop below this 26.60 zone, because at the same time the price would be placed below the 21-day EMA. In terms of the upside, I would need to see a push above the 27.92 zone in order to get a little bit more comfortable with higher levels. So that's why we are also stuck here with silver, like with gold, and we cannot really do much. Now jumping into WTI oil very quickly. Well, I mean, yesterday the technical picture showed here that we have formed a possible shooting star, or actually more maybe of a doji here, but either way, both could be seen as potential reversal signals. Again, until we get that clear kind of, let's say, drop back below this little hurdle right here, this 57.40 zone, now that's where we'll go for lower areas. We'll go for a larger correction to the downside, but until then, guys, I mean, it's it could be a little bit of a tricky one here, and in a way, if you don't like this area here, you're not really comfortable with this 57.40, you could keep an eye on. Let me just reuse one of these. Actually, no, these are all needed. Let me reuse this now. this is the little obstacle, the short-term obstacle. I mean, don't focus on it too much, but just keep in mind as well, just that 57.27 zone. And that's marked by the high of the 5th of February and near the low of the 9th of February. So good potential hurdle. If we get a drop below this 57.27 zone, this could kind of just strengthen the idea of a possible larger correction here to the downside, where we'll aim for this upside line or one of these obstacles here. But I'll get to those when we, or should I say, if we see that drop below the 57.27 zone. In terms of the upside, well, if it continues to balance here above this 57.40 territory, then we could see another push higher, and our next target here could be this 59.61 zone marked by the high of the 20th of January of last year. So good potential target. Let's see if that's going to play out. Now, jumping into Ethereum. Okay, this one is a little bit stalling, I would say, because basically this level needs to be adjusted. So after kind of reaching the all-time high yesterday near the 1830, well, let's round it up here, maybe a little bit, 1839 and 39 zone, the crypto reversed back down. It stayed slightly in the negative zone. Today it's trading still in the red. However, of course, overall, don't forget we are continuing to balance above this upside line drawn from the low the 23rd of December. And in a way, given that we already had quite a, let's say, decent move here, maybe a bit of a corrective move lower here could be possible. Maybe towards this 1595 territory or towards this upside line. We'll keep an eye on the 21-day EMA as well, just on the, to be a little bit on the safe side, and then we'll take it from there. But again, for now, what I'm kind of considering here a possibility is to see something like this, guys. There we go. Again, the support zone, my first target would be this 1595 territory, and then maybe this 21-day EMA, depending on the circumstances, and then we'll take it from there. My last resort is this upside line, which of course, if gets broken, could open the door towards even lower areas. But at the moment, yeah, we'll be very careful. If of course the crypto starts pushing above the 1839 territory here, this will confirm a forthcoming higher high, and more buyers could join in. Litecoin. So this is what I've mentioned to you guys yesterday, and what I was saying, that if we see that daily candle staying below this 185.75 zone marked by the highest point of January, then there is a good chance we could go for a bit of a correction here to the downside. But of course, let's be very careful. What could happen here, for example, as well, that we could see a push higher. We could even overshoot this 185.75 zone, but if again the daily candle fails to remain above this hurdle, now that's where we could see another kind of the increased possibility of seeing a bit of a larger correction to the downside here. So yeah, that's what you need to kind of keep in mind here for now. Let's see if that's going to work out, but yeah, that's the case at the moment, guys. Let's see, it might not even travel above this 885.75 territory. If the bears are going to take control today, then yes, we could go for that larger correction to the downside. AUDCAD stuck here. I've mentioned this before, if you remember. AUDCAD is at a very interesting spot here because it's stuck between these two lines. The upside one here, drawn from the low, the 21st of October, the medium-term upside line, and the short-term downside line, drawn from the high of the 7th of January. So what it means that if, of course, if you If you want to be very aggressive, you could start looking at some maybe higher levels right now. But to be honest, I mean, just to be always, just to be on the safe side, guys. Certain levels, I would prefer to wait for certain levels to get broken, because again, although we're testing right now this downside line, yes, of course, the medium-term trend is still to the upside, but still, yeah, we need that break here. We need that break above this downside line. We need to see a push above this 0.9851 zone marked by the high of the 26th of January, and then we could go for some higher levels. But yeah, at the moment it's a bit of a tricky one here, although a lot of things are leaning towards the upside. Still, this confirmation break here would be needed first, because if this downside line continues somehow to provide resistance, well, guess what? I mean, we could see a bit of a decline here. However, even then, we couldn't get very comfortable with the downside, because still we would need to see a break of this upside line first and a drop somewhere below the 0.9799 zone right here. Oh, sorry, 0.9775. Sorry, 75. So there we go. That's the one. The 0.9775. That's what we would need to see, kind of a break off, in order break of which could open the door towards lower areas. USDCHF, so this one is pushing lower. Of course, it just kind of mimics the DXY very closely, and so far, I mean, yes, it's also below its two lines, the upside and the downside one, so everything's kind of leaning a little bit more towards the downside. Now, previously I talked about this level, the 0.8758 zone. Yes, I'm gonna kind of still keep in mind that level, but I would first probably aim for the this 0.8850 zone, because that's going to be an important level to watch here. That's a very good area of support here, and well, we'll see if this provides good support once again or not. In case the pair suddenly reverses back up here, we could start looking at some higher levels if the pair climbs above the 0.8983 territory right here, and then we'll take it from there. GBPAUD. So that's the reason why I said to you guys with GBPAUD when I've covered this one this week, be very careful here, because although we're still trading above this upside line, and in a way everything's kind of, I would say, leaning towards the upside, because the trend is still not broken. As you can see, it's struggling to kind of move away from it, and that's why the reason why I was saying that my preferred scenario for the upside would come here on a break of this 1.8024 zone. Until then, all this area right here would still be a bit of a neutral one for me. I would probably maybe be cautiously bullish, very cautiously bullish, but if we get a break above this 1.82024, then yes, this will confirm a forthcoming higher high, and my next target will be this 200-day EMA. Now, in terms of the downside, if this upside line gets broken, we see a break of this 21-day EMA, and then a drop below the 1.7789 zone, which is currently the lowest point of February. Now that's where I'm gonna get a little bit more excited with the downside, because if this upside line gets broken and we see a drift lower here, but if, let's say, it struggles to move below this 1.77, or should I say it struggles to stay below the 1.7789 zone, then we could see a nice rebound and a push back up. So basically, otherwise we'll just get ourselves a nice little range here. So that's why I would prefer to see and then wait for a drop below this hurdle first. And finally, EURUSD. So we stayed above the 21-day EMA, so that's a good sign for the bulls. However, we're struggling with this 1.2156 territory. Now, yesterday I thought maybe we'll just have enough steam to reach that, but as you can see, it didn't really do that. So maybe we'll leave it for today. However, again, shooting star, doji, with one of those. So that's why, guys, I mean, let's be very careful on that, because maybe this will be seen as a temporary, as a potential correction. However, potential reversal signal. However, of course, in line with everything that DXY and USDCHF are kind of still pointing to the upside, that's why maybe we'll ignore this part of this being a doji or a shooting star, and we could see actually higher levels being met. But still, I would like to first aim for this 1.2156 territory and then take it from there. If we get a push above it, yes, wonderful, we'll go for some higher levels. But if we don't, if we struggle, well, it's kind of back to the drawing board. So guys, that's it for this session. I hope you found it useful. Oh, just a quick mentioning about the economic calendar today, guys. So just to let you know, I mean, there's not much happening. And basically, there's not much happening in terms of economic data, but a few things to mention, of course, are the initial jobless claims and the continuing jobless claims in the U.S. That's something to keep an eye on as every week, and of course the Fed monetary policy report. Now that's getting released semi-annually, guys. We'll see what it has to say, but yeah. Keep your eyes on those, and probably more volatility could come on the on any news surrounding the proposed stimulus bill, and of course there's a lot of issues on that. For that information, you can have a read through our daily reports on our website, and yeah, guys. Again, keep your eyes on those news, on that news, and of course on the developments surrounding the vaccine. So yeah, but again, as the most important, guys, stay safe yourselves, and join my video later on. My traders tea time, 13:30 GMT. There we go, 13:30 GMT. For now, have a wonderful trading day, and I'll see you later. Thank you very much, and bye bye.